Imagine checking your crypto wallet and seeing your favorite tech stocks, Apple, Tesla, or maybe Google, all sitting right next to your Ethereum and your Solana. That's not a future dream anymore. It's happening right now under your nose. That fine line between traditional finance and crypto is vanishing as major platforms begin tokenizing stocks before moving them on-chain. We're talking real shares, tradable 24/7 globally and without any middlemen. This is one of the biggest steps toward mainstream adoption of blockchain that we have seen just yet. Robinhood just shook up the market by launching tokenized US stocks, as well as ETFs in Europe, while building its own layer 2 blockchain on Arbitrum. Meanwhile, other platforms like Backed, DeFi Chain, as well as the synthetic stock protocols that are popping up on Solana and Ethereum are all laying the foundation of what could be the next trillion-dollar market sector, tokenized real-world assets, or commonly known as RWAs. This isn't just hype, and it's moving fast. Crypto-native projects that embrace it early, they stand to gain the most benefit as institutions and retail investors that are beginning to fuse these two worlds together. Welcome back to another episode of JRNY TV, where we break down the biggest topics that actually matter while showing you how to stay ahead of that herd. I'm Nick, and today we are diving deep into why the stock market is fusing together with crypto, what that means for the future of trading, your wallet, and how you can prepare your portfolio right now before the next wave of adoption and opportunities begin to take off. Why stocks are being put on the blockchain. So maybe you're asking yourself, why are stocks moving to the blockchain in the first place? Simple. It comes down to a few core advantages: speed, accessibility, as well as transparency. Those traditional stock markets are still bound to old school infrastructure, and they are extremely limited to trading hours that are turned off after the bell. Yeah, turned off. Blockchain completely flips that script. With tokenized stocks, you're going to get 24/7 trading, near instant settlement times, and a clear record that's on-chain with every single transaction. It's faster, a lot more efficient, and also reduces reliance on outdated middlemen, such as clearinghouses as well as custodians. Another major reason, global accessibility. Not everyone in the world has access to Wall Street or a regulated brokerage account. However, with just a crypto wallet and an internet connection, you can suddenly access the stock market from anywhere in the world. That is a huge deal for emerging economies especially, and for investors who have been traditionally locked out of US equities. The blockchain, it tears down those borders and offers bridges in return. And then there's the programmable aspect. Imagine owning a tokenized Tesla stock, pays you rewards, integrates with DeFi platforms, or even lets you collateralize it for a loan, none of which is currently possible throughout the legacy system. But on-chain, dreams are becoming reality. Tokenized stocks aren't just a repackaged version of what already exists. They unlock entirely new layers of utility. This is exactly why institutions, platforms, and builders are all scrambling to bring real-world assets, especially stocks, onto the blockchain. And what's happening right now is just the beginning. Robinhood and the L2 revolution, why this matters. Robinhood just dropped one of the biggest moves in crypto fintech history, launching 200 plus tokenized US stocks and ETFs on Arbitrum, but for the users in the EU, including top names like Apple, Microsoft, Nvidia, Amazon, and even private assets like OpenAI and SpaceX. That's massive. These tokens trade 24/7 with no commission, and they pay the dividends directly in-app. On the headlines, Robinhood's stock hit a new record and soared nearly 10%. It's not just a product update. It's a strategic pivot that's currently signaling one thing: the financial markets are finally merging with crypto infrastructure. This rollout is built on Arbitrum, which is a top-tier Ethereum layer 2 that showcases real-world value of blockchain speed and scalability. But Robinhood isn't stopping there. They've also announced plans to launch their own layer 2 chain later this year to support thousands of tokenized assets while enabling 24/7 continuous trading and features like staking and futures. That's a full stack approach. Custody, dividends, custody-free wallets, trading, all happening on-chain. It's also proof that tokenized stocks are quickly evolving from experimental to foundational. Kraken and Bybit, they are rolling out 60 plus tokenized US equities, integrated into DeFi platforms like Radium and Jupiter. This means tokenized stocks, they're not isolated. They're being woven into on-chain lending, liquidity pools, and synthetic finance, all while allowing global access to US equities from anywhere in the world in real time. The bottom line here, Robinhood's play isn't just about convenience. Right now, it's paving the way for real-world assets to become the next crypto frontier. This opens up new utility for crypto wallets while accelerating mainstream adoption and also setting the stage for TradeFi and DeFi crossing over. If you're serious about crypto's future, this section should be ringing your alarm bells. Traditional stocks are going on-chain and fast. why this shift is a massive accelerator for crypto. We're not just watching innovation unfold, we are witnessing the financial system being rebuilt on-chain in real time. The rise of tokenized stocks isn't a gimmick or isolated experiment. It is the beginning of a massive shift where RWAs, known as real-world assets, are all coming to crypto at record pace and at scale. What Robinhood and Kraken and many others are all doing is transforming the idea of crypto from being just about coins and speculation to becoming the rails of the world's financial system. Stocks, ETFs, bonds, real estate, you name it. They're all coming to the blockchain, and they're doing so right now. Why does this matter? Well, for one, it eliminates geographical barriers. People in emerging markets, approximately 1.4 billion people, according to the World Bank, who previously had no access to US equities, but they can now access and own tokenized Tesla shares or S&P 500 ETFs utilizing stablecoins. And not to mention, because it all runs 24/7 on blockchains like Solana and Ethereum, as well as Arbitrum, users can trade anywhere, anytime, and even on the weekends. No waiting for markets to open on Monday, or even waiting for the holiday to end. No banks needed, just your wallet with an internet connection, and finally, it gives you access to global markets anywhere in the world. It also supercharges DeFi. Tokenized stocks can now be utilized as collateral, traded on DEXs, yield farmed, and even shorted. Platforms are now integrating these tokens into the DeFi ecosystem, unlocking a $1 trillion RWA sector within crypto. This is huge. It means traditional finance no longer has to be siloed. It can be blended seamlessly into decentralized systems with smart contract-driven transparency and efficiency. Perfect for scale. Most importantly, this represents a huge narrative shift for the next bull market. Investors, they're starting to realize crypto isn't just about memes and volatility. Crypto is about infrastructure and access. Tokenized stocks prove that crypto rails are faster, cheaper, and much more inclusive than traditional finance ever was or cared to be. And as this narrative builds, do expect a major influx of institutional money and a retail wave that wants in on the ever-evolving world and future of finance. How to prepare for the tokenized future. So now that we've laid out the landscape, the question is, how do you prepare for this massive shift before the crowd catches on? Let's take some time to break it all down step by step, because being early is not enough. You need to already be positioned before the wave starts. So step one is understanding which blockchains are leading that charge. And right now, Ethereum and Ethereum layer 2s like Arbitrum as well as Optimism are seeing the bulk of tokenized stock experimentation, thanks to their lower fees and compatibility with the Ethereum ecosystem. But do not overlook Solana. It's fast, it is scalable, and it's already powering a ton of innovation in the RWA and meme coin sectors. Your first move should be to choose a chain and get very comfortable using it. And that means setting up a wallet like Phantom for Solana or MetaMask for Ethereum and L2s, and learning how to interact with DeFi apps and bridges. Step two is choosing your tools and platforms wisely. Robinhood's upcoming stock token rollout and L2 infrastructure may be the headline, but they're not the only player on the board. Projects like Backed Finance and DeFi Chain, they're already issuing tokenized shares of Apple, Tesla, and many other blue chips. And yes, they're live and they're tradable. What matters now is getting familiar with these offerings while testing with small amounts and figuring out how they operate, especially in terms of liquidity, slippage, and access. Strongly consider diversifying your exposure across multiple platforms and keeping up with their product roadmaps. Step three is to plan your strategy around both investing and usage. Tokenized stocks, they can be utilized for more than just holding. Think about staking them for yield, utilizing them as collateral in DeFi protocols, or integrating them into a dollar cost averaging strategy. Also, please do not forget about tax implications. Tokenized assets may be easier to trade, but each transaction could be a taxable event depending on your jurisdiction. Make sure to know the rules and always be organized. Track your trades and make sure to use your crypto tax software if needed. And finally, stay in the know. This space is evolving at breakneck pace. What's new today may be standard next week. So always follow factually based sources. Make sure to always double check and do your research. Also, if you haven't joined a crypto community, you need to, especially one that focuses on tokenized RWAs and subscribes to newsletters or channels that helps you stay ahead of the curve. Platforms exactly like Trade Hero, they offer alerts that are down to the very minute of every market move, as well as the strategies to help keep you ahead of any major market moves. Tokenized stocks are not just a trend, they are an inflection point. The future is now. Do not miss it. Alrighty, and that about wraps up today's deep dive into the tokenized stock revolution. We're not just witnessing the next phase of crypto, we are part of history in the making, while watching the financial system itself evolve right before our very eyes. Bet, stocks are coming to the blockchain. Platforms like Robinhood are quickly rolling out tokenized shares. entire L2 ecosystems are now being built to support it. This isn't a theory. It is happening right now. If you're sitting on the sidelines waiting for the right time, that window may be a lot closer than you think. Altcoin season is ramping up and fast. Crypto stocks are pumping, and that line between traditional finance and blockchain is now getting blurrier by the day. But this shift also means opportunity. So remember, if you are prepared, if you are early, that opportunity, it may be for you. This is your call to action. Learn the tools. Build your strategy, and most importantly, stay ahead of that herd. Because remember, in crypto, being early is not a luxury. Being early is the only way to win. If you found yourself wanting even more insight, analysis, and alpha after this deep dive, please make sure to join our Trade Hero community and subscribe to JRNY TV so you never miss a beat. If you're new here, please be sure to smash that like button, share this with your friends, and drop your thoughts in the comments below to get the conversation started. This is JRNY TV. As always, stay early, stay informed, and until next time, we will catch you in the next one.